Hello, everybody, and welcome to our 7th episode of our interview series with Mickey Fulp, the Mercenary Geologist. Hello, Mickey.
Hello, Kai. Hello, Paul.
I'm joined by Paul here as well. We're sitting here together in New York, where Paul and I are visiting or attending the Mines and Money conference here in New York City, and Mickey's joining us from New Mexico.
Yes, sir.
Hi, Kai.
Hello.
We stuck our heads together again and came up with a small agenda for our episode today. So we're going to start talking about the development of the metal prices in recent days. We're going to touch on the Cobalt 27 or the proposed Cobalt 27 $200 million financing. And we're going to sum up our interview or our session today by doing a numbers round. Everybody or every participant is going to pick a number, and we're going to discuss it real quick and get the person's take on the number and why they chose it. So we're going to start really discussing the metal prices and how they developed over the last 3 weeks, actually. Ever since the French election, it seems like the metal prices have taken a dive, and I'm going to pass on the virtual microphone here to Mickey and Paul to get their take on what might have caused the slump in gold price as well, and as silver and the other precious metals.
Yeah, so I'll start off and I'll just review what's happened in the prices lately and then throw it off to Paul and we'll discuss the reasons. Gold went below its 200-day moving average today. It sits at 1243 right now. Silver is at a 2-month low, and the following metals are at 5-month lows: platinum, copper, and zinc. Oil is at a 5-week low, and finally, palladium has bucked the trend, and it's sitting at, over the last week or so, at its highest since December of 2014.
Interesting. I didn't know that.
So why do you think that is, Mickey? What do you think is going on? Obviously prices are still higher than they were, generally speaking, a year ago, but things seem to have sort of plateaued and are now sort of deflating again.
Yeah, I think we've had some overbought situations perhaps, so coming back a little bit more to reality. But really the control here has been, I think, risk on in the stock markets, especially with post-French election. It looks like Le Pen will not win, so the France will stay in the euro. Or European Union. Trump tax plan is adding to this risk-on philosophy. Regarding oil, U.S. shale oil production continues to climb. Dollar is up on the FOMC meeting today with no rate hike. And finally, especially in regard to industrial commodities, copper, zinc, oil, iron ore, actually, the Chinese PMI was down to 50 yesterday for the month of April. That's basically neutral, but this is after big gains in Q1 of 2017.
It seems that all these things, all these factors you mentioned are sort of trumping sort of geopolitical risk or perceived geopolitical risk. If you look at speaking to people expert in sort of geopolitics, people are worried about the situation escalating with North Korea and China and what have you, but all that seems to be discounted or brushed away by people more focused on sort of markets, basically saying the markets don't care about that or don't see that as a risk.
Well, I would agree with that, and it's a bit puzzling why. I think probably the market saw that as a risk 2 or 3 weeks. But once again, as soon as that French election happened, metals kind of started going south. So
it's also around the time when Trump had passed the 100-day mark, right? And I think one big issue that drove metal prices after the election in November was his announcement that he's going to spend $500 billion on infrastructure in the U.S., and nothing's happened so far.
Yeah, I don't think anybody expected that to happen quickly. You got to get a health care plan and a tax bill through before you can start spending. And I think actually, Kai, it was $1 trillion. Where's that money going to come from?
Yeah.
But I guess one thing that's odd about the price falls is that it's across such a broad spectrum of commodities. You'd expect that, if the US government is going to start investing in infrastructure projects, if there are going to be tax cuts for companies, that they're going to invest in stuff again, building new factories, building new houses, whatever. That should be good for things like copper or the industrial metals, but they haven't responded at all.
Well, and so maybe this is the wild card that I don't have a good handle on, and I haven't really seen it in the news, but I would suggest that private hedge funds are moving away from commodities en masse right now, and maybe that's what's driving it. I have no evidence for that, but oftentimes hedge funds lead these sort of broad swings in commodity sector wise.
I suppose, yes, if they can get the returns they're after in more predictable, boring sectors, why place capital in the volatile, exciting mining sector?
Exactly.
No, we're seeing massive outflows from the ETFs right now, so that sort of concurs with what you mentioned there, Mickey.
Yep.
I'd like to conclude that because I think we mentioned most of the points that we believe at least are driving the metal prices these days. One thing, another metal I'd like to talk about indirectly is cobalt, actually. Since here at Oreninc we're covering a lot of financings, one that has come to our attention is the Cobalt 27 financing. They're trying to raise $200 million and appointed lead banks out of Canada like Scotia Capital, Canaccord, and if I'm not mistaken, it's TD Securities that are more or less underwriting this $200 million financing. And they're currently on a marketing spree through North America trying to raise that money. We briefly talked about this before hitting the record button here, but it'd be interesting to get your guys' take on that financing and what will happen to the whole space and whether the Cobalt sector will see a massive spur of investments following maybe a successful financing here.
Well, I think some interesting things about this financing. One, you've got the dollar amount, $200 million. We don't see a lot of financings of that amount at the moment, but also for what it's used for. I mean, the use of proceeds. They're looking to buy physical cobalt and basically sit on it, and also buy up royalties in cobalt exploration projects, provide some funding for those. And as far as I'm aware, there aren't that many cobalt exploration projects. Cobalt is typically a byproduct, almost essentially always a byproduct of either copper production and or nickel production. So pure cobalt plays are very hard to find indeed. Are you aware of many cobalt exploration plays, Mickey?
Not standalone, and your point's well taken, as a byproduct of other mining, and generally from smelters that process nickel and copper ores worldwide. So it's pretty much big boy football historically. The only viable North American cobalt exploration / development play that I know of, and it really is development play now, is held by eCobalt, the old Formation Capital deposit in Idaho, and that is a very interesting cobalt play, and pretty much a standalone cobalt play.
If I might jump in here, what do you see, or what do you think will happen to the whole cobalt sector if this financing goes through?
Well, certainly it's going to give a bump, I think, to the other penny crapper juniors, if you will, who have cobalt plays, projects, dreams of grandeur in the Cobalt District of Ontario, which Kai just corrected me. I said the historic average width of the veins was 6 inches, and he told me it's 10 centimeters, so I was 50% off on my estimate of that. I don't know how those things are mineable myself.
I think it's perhaps just worth throwing out for the listeners' benefit that cobalt's becoming in vogue again because it's one of the elements used in sort of batteries, particularly batteries for electric vehicles, which are forecast to post significant growth. Before the Mines and Money event here in New York, I was participating in the Benchmark Minerals workshop on battery minerals, mainly focused on lithium, but also obviously cobalt and graphite, and their outlook, their forecast is, cobalt is going to be in a very tight supply situation, so it should be good for cobalt prices. Although the people that make the batteries for electric vehicles are looking to reduce the amount of cobalt used in each battery, because again they foresee a big supply crunch coming, so they want to reduce their exposure to cobalt to a greater or lesser extent.
One thing I will say about cobalt, and I first looked at cobalt prospects in 1979 when the price spiked, but if memory serves, the price spiked up to $50 a pound briefly in about 1979, 1980, immediately fell back. We saw prices spike again during the overall commodity run prior to the global economic crisis in 2008. But those cobalt prices were never sustainable. They were basically spikes up and down, parabolic charts. So count me as a skeptic for long-term, stable, high cobalt prices.
No, I think that's a good conclusion there. I think we should wrap that cobalt topic up right here. One last topic of conversation today is all three of us here have picked a number we'd like to throw out and briefly mention why we picked it, and I'd like Paul to start with it.
Okay, well, I'm going to go with 83%, and 83% is the premium that Sandstorm has paid to, or is paying, intends to pay to take over Mariana Resources and its Hoffmann project. A pretty healthy premium there, I think.
I would agree with that, and that Mariana Resources shareholders are quite happy with that premium. And if I was a shareholder, I might tend to take the money and run.
Yeah.
Well, there's a cash component to it.
Sell my stock, or wait and sell the stock when it was finished.
What's your number, Mickey?
Well, my number would be $250 billion, and that is Apple's current cash position, and it is greater than the GDP of the following countries. Greater or equal, I should say: Chile, Finland, Ireland, and Pakistan. And most of that cash or securities is kept overseas, and it will not be repatriated until Trump's tax plan and corporate tax reduction from 35% to 15% is a done deal.
Interesting.
Yeah.
Well, Tim Cook isn't he pals with him and on the board or so on his advisory board? So that's interesting.
Kai, what's your number?
My number is actually 450 euros, because that's how much my flight cost to get to New York for a few days and learn about a couple new mining stories. So my point being, choosing that number, it doesn't have to be expensive to educate yourself on mining, meet the CEOs, and make up your own mind.
Very good.
Yeah. So it doesn't have to be expensive, and to get an educated opinion, or at least work on it. And gentlemen, thanks for your time again, as always. This concludes our 7th episode. Mickey, thanks for taking the time sitting there in New Mexico. Paul, thanks for joining me here in New York.
Thank you.
And we'll be back with our 8th episode probably in a couple of weeks. Thanks, everybody.